Hello, good afternoon. You've tuned into your stocks on CNBC-TV18. I'm Vinny Motiwala in the Mumbai studio. A quick look at what the market is doing as of now. Seems like it's again headed back to the day's lowest point. So let's pull up the Nifty. Somewhere just around the 24,000 mark is what it's holding on to. So yes, a bit of a decline that we've seen. Still around 50 points from the day's low is what we're keeping an eye out on. As of now, decline of 0.6% in a trade is what we're watching out for, the Nifty 50. Sensex 2 is trading with cuts of almost 0.8% in trade. 79,300 levels approximately there is what the Sensex is trading at. Pull up the Nifty mid cap. You know, it was holding on to that slight bit of a green and positive sign at one point of time. Now we've seen it come back to the red side and it's down almost 1/10 to 2/10% in trade. Small cap, what is that doing? Because that's come across the flat line now that you're looking at it. Small cap just flip-flopping between the red and the green. In the morning, it was comfortably holding on to the green side. Seems like it's moving toward that red, so keep an eye on that. Nifty Bank also is among the losers coming in today, and we have Nifty Bank, which is down more than 1% in trade, so watch out for that one. What is Nifty Auto doing? Because that was also seeing some bit of a pressure coming in terms of the two-wheeler side. That was not good in terms of the auto sales numbers, but Nifty Auto managing to hold on to 0.2% of gain so far. Pharma and IT continue to be the top sectoral loser in trade. But yes, that's how the market is looking like as of now. We will get started with all your stock-related queries on the show. This is the show where we will be solving all those doubts that you all have and that you all have sent us through the day as well. So we have Shahina Mukadam, independent market expert, as well as Vaishali Parekh, Vice President of Technical Research at Prabhudas Lilladher, joining in with us to solve all the stock-related queries that you all have sent us. Good afternoon, ladies. Thank you so much, as always, for joining in with us on a happy Friday. Markets are not that cheery, but let's get started with the queries and cheer up our viewers with those solves that you all will be giving us, but solutions that you all will be giving us. So let me start with the first query, and we have Manappuram Finance. That's a query on. We have Jyoti who's writing to us from Mumbai. She's holding 20 shares of Manappuram Finance at 180 rupees per share. Wants to know whether to hold or sell this. What is the view coming in on this, Shahina? Manappuram Finance, how is it looking like for the gold financier? Could the viewer continue to hold?
Well, overall, gold financing companies are likely to do a bit better going forward in the second half. But Manappuram specifically, actually, first half was not that good. And second half also is likely to be a bit impacted in terms of higher costs. But at the same time, what I would say is that a large part of the correction has actually happened. And valuations are not expensive. If you see price to book, it's about 1.3 times. For Manappuram, I don't think that is too stretched. So if one is a long-term investor, one can continue to hold. But I would definitely say that, if you want to limit your short-term losses or medium-term losses, it's better to have a very strong stop loss so that you can actually make some money over the longer term.
Okay. Keeping an eye out and keep an eye out on the stop loss is the word coming in as well from China as well. On the technicals, so Vaishali, what's the view coming in from Manappuram Finance? Last 1 month when I'm looking at it, seems like on the charts, we've seen that pickup coming in, 15% uptick. But before that, the stock was not doing pretty much anything in the last 6-7 months. What is it that the technicals are indicating for this one? The viewer is making a very small loss right now. It's at 187. The viewer bought it at 180. Around that level, I think. So keep an eye out on that. What should the viewer be doing?
Very good afternoon. So I think the corrective move is really done with. And of course, Muthoot has been an outperformer. But talking about Manappuram, I think, depending on the time horizon, whether he's a short-term trader, then of course he needs to follow strict stop loss. But even for a positional trader, I would say continue holding. 175 acts as a good support, and it's gradually getting into a trend. So we may see a little bit of retracement, but I guess gradually we may see the targets of 200, 220 coming in. So not in a hurry, hold. But if it's a short-term trade, of course, follow a stop loss of 180.
Okay, stop loss trade and follow a stop loss is the word coming in from Vaishali. Let's move on to the next query. We have Prashant Goyal, who's writing to us from Mumbai, holding 1,200 shares of L&T Finance at a price of 86 rupees per share. He wants to know in terms of the long-term story as an investment, does it make sense to continue to hold this stock? What is the view coming in on this? Shahina, let's go across to you first. For the long-term bet, is it a good one to hold on to?
Well, like, the other NBFCs which have actually corrected, so has L&T Finance. And here also, I believe you need to keep a very strong stop loss of, I would say, close to about 125. It's a deep stop loss because while first half again, it was not too good. Second half again, because of microfinance, certain issues relating to balance sheet may again crop up. So to that extent, I don't think this whole year is going to be too good for them. Having said that, I think for the medium term, maybe 2 to 3 years, the growth is likely to come back in terms of profitability. They could do about 15 to 20% profit growth. And if you look at the valuations, it is not too stretched. Here also, it is about 1.3 times, 1.4 times price to book. So in terms of growth, it is fairly priced. So here again, what I would say is you hold it for now for a bounce. At the same time, do keep strong stop losses.
Okay. And Vaishali, your view on L&T Finance? What should the viewer be doing with this now?
So I would say actually when I'm looking at the long-term chart as well as the short-term chart, I think this stock should not be left in a hurry. I wait for a bounce. In all likelihood, this can go towards 165, 166. The confirmation of a good strong upward move will come only above 165, 166. Then one can look for a target of 180. But for now, the stock is just showing signs of bottoming out. There is in fact a double bottom formation at around 130 levels. So I think, and like all NBFCs have started doing well, this too should do well. At least wait till 160.
Okay, at least wait till 160. That's the word coming in from Vaishali. Let's move on. This next query, we have two stocks that the viewer has a doubt on. We have Indira, who's writing to us from Vizag. She's holding for 70 shares of Nalco. This is at a price of 176 rupees per share. So she's making a profit on Nalco. And the other one is 920 shares of NHPC at a price of 114 rupees per share. And that one, she's making a loss. Now, the viewer wants to know what should she be doing with both these stocks, continue to hold or look to sell. What's your view on this one, Shahina? Nalco and NHPC.
Yeah, I would say she could continue to hold both these stocks. Nalco, I believe aluminium, it has got the benefit of having alumina. And to that extent, its expansion plans also will contribute to the bottom line. In metals, I think that is one of my top picks in the overall metal sector. And in terms of NHPC, I believe that, yeah, you should keep a stop loss, but you could continue to hold because there, I think they have got sufficient orders in hand to execute. And even the average realization should remain stable for them. So I think both these stocks could be a hold as of now. Of course, the way the markets are, it's better to always have stop losses.
Okay. And Vaishali, on the charts and technicals, Nalco and NHPC, what is it looking like?
So I would say in both these stocks, let's talk about Nalco first. Good corrective move has already taken place. But if it were to see today's candle, what we are looking at, it could get into still some more round of selling pressure. But I guess good erosion has taken place. 195, 200 acts as a very good support. In my opinion, such stocks should be added at these levels because it's a good, fairly priced and a favorable risk-reward ratio. So I would say yes, Nalco is a buy. Add more at 195 if you get a chance. And the other one, NHPC, also, I think it has seen a decent corrective move. And right now, it is showing some stability. It is, in fact, just consolidating within a range of 78 to 86. So once we see the stock moving, I think first target would be around 95. That's quite a return for a positional trade. And above that, you could see even above 100 levels. So in my opinion, not in a hurry in such a market, one should be looking for buying opportunities.
Okay, should be looking for a buy opportunity for these stocks, maybe, is the word coming in from Vaishali for both Nalco and NHPC. Let's move on to the next query. We have Delta Corp, that is the stock that we're going to talk about. Priya Mindar Datta, who's writing to us from Kolkata, holding 100 shares of Delta Corp at a price of 187 rupees per share. She wants to know the outlook on the stock. What are you looking at in terms of fundamentals for Delta Corp? Shahina, what is the viewer supposed to do now?
That's a very difficult, answer. But basically, I would say, a lot of issues that they have faced, both in terms of, the GST issues, they've never really recovered from it. If you saw the second quarter turnover was down about some 30%, and profits were down more than 60%. And not too much is likely to change, in my view. It could stabilize, but I don't see a big jump from here. given the fact that we are already hearing that Goa tourism is seeing some sluggish growth even in this quarter. They saw some sluggish growth. So to that extent, I think the stock will continue consolidating at current levels. If I was an investor holding for the medium to long term, I would prefer switching to a pure, hotel company. Even the more expensive ones like Indian Hotels, Lemon Tree. If at all you get corrections in those stocks, I would say it would make a better switch.
Okay, maybe a better switch coming in, maybe a pure play hotel is what, Shahina is highlighting instead of a Delta Corp. Vaishali, what's your view on Delta Corp? On the charts, also indicating similar trends that, not that exciting, and should the viewer book out their profits in?
I definitely agree, because only consolation is that it's close to its very prominent support. So maybe it can see a bounce, but why not get into a very strong stock in a market like this?
Okay, absolutely. Keeping an eye out on a Delta Corp, can move to hotel players is the word coming in there. But on that note, let's slip into a very short break. But after the break, we'll still be continuing with all your stock-related queries, so don't go anywhere. Welcome back to Your Stocks on CNBC-TV18. We still have our experts with us, Shahina Mukadam, independent market expert, as well as Vaishali Parekh, Vice President, Technical Research at Prabhudas Lilladher, to solve all your stock-related queries. Let's keep it going with the queries then. PVR Inox, that's the next query on. We have Ashok Kumar, who's writing to us from Telangana, holding 500 shares of PVR Inox at a price of 1,607, making a loss here right now. Stock is trading at 1,300. He wants to know, for the long term, what is the view coming in on PVR Inox? Should he continue to hold this or look to sell? Shahina, what are we watching out for? While Bollywood this time also concerns come in that, they've not done that well, Bollywood movies, but PVR Inox, should the viewer continue to hold this?
See, last 5 years, the stock has not given any return. And I don't expect in the very long term things should drastically change. While I believe the management has taken all the right moves, they're doing their best in terms of, offering, certain offers on tickets, on F&B. They're also re-releasing some of the old movies. So all these things are there. They have managed to reduce the losses, but, they're still making losses. And it's a capital intensive business. Balance sheet is pretty stretched in terms of, what they can do to actually turn around the whole thing. And return ratios are, pretty, very bad. So to that extent, I would say in the medium term, it doesn't make sense to continue to hold on to PVR Inox. I would believe that it is better to switch. You could switch to some other media stock, like I would say Network 18, which is actually, going to be present, across media channels. So I would say it should be switched from this stock.
Okay, switch from PVR Inox, at least in the near term. That's the word coming in from Shahina. Vaishali, on the technicals, what are you picking up? Like Shahina is also mentioning, the stock has not done pretty much anything, and especially in the last 1 year also, it's down 24%. So, charts, what should one do? Maybe should they go to average out or maybe book out their losses right now?
No, I don't think so, because this stock has really disappointed all the investors. And it continues to make new lows. So I would say there is, even now, if I'm looking at chart of all periodicities, a weekly or a daily chart, there is no sign of reversal also. So I think exit from this stock and get into a good quality stock, like, for example, even a FMCG sector could be a safe bet, like a Britannia or an HUL. These are the stocks which would be a safe haven right now in a market where there is a lot of uncertainty and which have really got corrected to quite an extent. So frontline stock should be the focus point right now.
Okay, frontline stock should be the focus, and maybe get out of PVR Inox is the word coming in from both our experts. The next query, we have Deepak, who's writing to us from Chennai. He's holding 300 shares of Indian Oil Corporation, IOC, at a price of 170 rupees per share. Currently, the stock is trading at 140, 138. So they're making a loss on this one. Wants to know whether continue holding this or, book out their losses and sell. Shahina, your word?
See, I would say you can hold, but hold with a stop loss of, close to the current levels, which is about 130. The investor has already lost money. I believe in the coming quarter, things should stabilize. We saw very poor Q2, in fact, first half. And Q2, we saw the GRMs fall to almost $4 per barrel. And I think, going forward, things should stabilize at those levels. But I would say you hold with a stop loss.
Okay, hold with a stop loss. That's a word coming in on IOC from Shahina. But on the technicals, Vaishali, IOC?
So I would say the stock has been beaten down right from 185 levels and right now at 135, 137 levels. In my opinion, she should average out at these levels to lower the cost and then have a relook because the stock can bounce towards 165, 168. So that way the cost also comes down and maybe see some profits. So I would say add more.
Okay, add more. That's the word coming in from Vaishali. Let's quickly just mark the flashes at the bottom of your screen. REC has come out with its Q3 updates. Loan dispersals are up by 18% at 54,692 crores, while renewable energy loan dispersals are up by around 58.1% as well. We're seeing the stock is buzzing in trade, holding on to a percent of gain. And let's not forget, today only we did have a brokerage note that is coming from MK, initiating coverage on PFC and REC, where they've given REC a buy rating, target price of 650 rupees per share. As of now, Q3 updates also seem to be a bit interesting, so keeping an eye out on REC. But okay, let's keep it going then, and back to the queries. We have the next query coming in on Zee Entertainment. Samba Siva Rao, who's writing to us from Telangana, he's holding 200 shares of Zee Entertainment at a price of 170 rupees per share. Wants to know whether should continue to hold this or book out their losses. Shahina, what's the word on Zee Entertainment? We've seen it go through its fair share of downs coming in the recent times. Any ups expected here?
Well, in terms of pure valuation on a standalone basis, it is not expensive. Having said that, I would still say one needs to switch. You could switch if you get any other opportunities in terms of volatile markets and stock of the other media company I already spoke about. Network 18, if you see a correction over there, you could look to switch from Zee to, some other media stock. Basically, the company continues to see problems in terms of multiple fronts. Management issues continue to hit the market in terms of news. You have certain issues with the auditor that is hitting the news. Balance sheet issues in terms of, that continue to, the FDs and those sort of news continue to hit the market. So while the management has been trying to sort out all these issues, I think it has lost out in terms of the business opportunities. What we were looking forward to in the last 3-4 years in terms of the merger, in terms of the business growth, those things have fallen through. And the competitors are actually, doing mergers and acquisitions, expanding. So I would say it is better to switch, from Zee Entertainment into a media company which has a business trajectory well in place.
Okay. Switch, that's the word coming in from China. And Vaishali, what's your take on Zee Entertainment?
So I personally would not recommend a stock like this, but purely on technical terms, I would say keep 120 F stop loss and hold at least for 145, 150. And if still ready to book a loss, it's better to switch. I think defense counter is doing very well. So are some of the stocks in rail. So these are all more promising than Zee. And media sector, I would also add Sun TV, if that is the sector that he wishes to be in.
Okay, thanks for that. A lot of other options that are there for Zee, as well as the stop loss that you should be keeping an eye out on. Let's move on to the next query. We have Sri Kumar Menon, who's writing to us from Kerala, holding 600 shares of Tata Steel, price of 130 rupees per share. Wants to know the long-term story that is playing out for Tata Steel and whether he should continue to hold the stock for the long term or then book out his profits currently. Shahina?
I would say he's taken a very risky bet with a huge quantity. Basically, I would, of course, say it's a hold because steel prices have sort of strengthened a bit, but there are very major positives and also negatives that can happen. Let's start with the negatives that could happen. You see, we have the Trump government coming in place, and they're talking of tariffs on China. Now, we will have to see how China responds to those tariffs. If they flood the global markets with cheap steel or they cut production. So, things are in the air. We are not sure. Also, we need to see the impact of all this on the rupee and, how it will be versus the dollar, how it will react. So these are the issues. Secondly, they've got another, impending negative because of some issues they're having with, in their European businesses, where there are talks of some fines that could be levied on them. So to that extent, there are a lot of negative news that could hit Tata Steel. Having said that, I think on pure valuation basis, it is not very expensive. So one needs to really factor in the positives, negatives, keep a stop loss.
Okay, keep a stop loss for this one. But let's move on. And Vaishali, your view on Tata Steel. What are you seeing on the technicals?
So I would say metal sector on the whole is very well corrected, and Tata Steel per se is at a very good level. But since Tata Steel is exposed to a lot of global markets also, I would say in steel sector, Jindal Steel, JSW Steel would be the ones which would give comparatively quicker returns. So if he's insisting on holding on to Tata Steel, well, level-wise it is fine. But otherwise, I would say priority preference would be Jindal Steel and JSW Steel.
Okay. You have Jindal Steel, JSW Steel as priority versus Tata Steel. That's a word coming in on from Vaishali. But okay, that was the last query for today, ladies. Thank you so much for joining in with us and solving all our viewer-related doubts. And happy weekend to all of y'all as well. But quick look at the markets. 24,000 is where the Nifty is nearing to. 24,030 around that mark is what the Nifty is trading at. Let's keep an eye out on where that is going to be headed in the last hour of trading session. That's going to be important because Nifty small cap also has now moved to the red. So Nifty small cap is also trading with cuts of almost 0.1% in trade. And similarly, mid cap is also seeing a further decline coming in, 0.3% of decline coming in for the Nifty mid cap as well. So important to watch out for in terms of where this is going to be headed in the next 1 hour of trade in terms of the market, and will the Nifty hold on to 24,000? But that's all the time that we have on this edition of Your Stocks on CNBC TV18. Remember, you can always email us your queries and we'll address them with our experts. Now stay tuned in for Closing Bell up next to take you through the last hour of trading session.